Hello everyone, and thanks for tuning into the Financial Investor channel. My name is Brent, and today we're going to be doing our 1 month recap for M1 Finance, Cash Managed Account, and the Roth IRA. We're going to be taking a look at August numbers of the value, the gains, the return for both the Cash Managed Account and the Roth IRA. Then we're going to be jumping into September's numbers, taking a look at the total equity in the portfolio, what dividends were paid out for the month of September, what stocks paid out those dividends, where those dividends were reinvested into, and whether the portfolio moved up or down, measuring the total return for the month of September. So of course, if you are brand new to the channel, I do make stock market, personal finance, and real estate videos weekly, so consider subscribing for future videos. And of course, if you do like the video, give it a thumbs up. I highly appreciate it. So at the very end of August, our cash managed account, this is the taxable account, had $216.87, $16.89 in total gains, and our total return was sitting at 12.01%. So how do we compare to last month's? Well, our total value of the account is now $227.02. Our total gains is up to $18.07, and our total return is now 12.21%. We did get paid out some dividends. We're now up earned dividends $2.28. So I still believe M1 Finance is one of the best brokers out there for brand new investors. If you're getting started in the cash managed account, minimum requirement is $100. That is the whole point of me creating the cash managed account. Me and my wife, we don't really we don't invest in the taxable accounts as often anymore, but I wanted to create this sort of fund to track and kind of showcase that if you're a beginning investor and you're just starting with $100 trying to save your way to $500, that way you can roll it into a Roth IRA. You can still make gains, you can still make a return. I just started this portfolio in February of 2018 when all my friends that I was telling, hey, get started investing, they're like, no man, the market's too high, everything's going to crash. I'm now up 12.22%. I know friends that are sitting on thousands of dollars in their savings account making 0.04, 0.15% in their interest, in interest, and that's 100% taxable at your regular income bracket, not dividend bracket or long-term capital gain. So huge difference there. So here, difference there between the month 216 to now 227. That's about an $11 difference. Our total gains went up from $16.89 to now $18.07. That's about a little under $2 there. We did make some dividends this month, and we made about a 0.21% difference in our return. One thing I made a video covering is that I don't like M1 Finance's way of tracking dividends, MLP distributions, or capital gain distributions, because take a look at this. So if I were to click here on Vanguard and go down here to my view details, we'll see for the month of September, the S&P 500 ETF here, VU, paid me a dividend of $1.21 based on how many shares I had of them. Well, that should show up in my activity tab, right? Well, it doesn't. So here, if I go back to my only activity here for the month of September, I have $10. And this was all because a viewer, subscriber, or one of my friends used my referral link. I got $10. They got $10. A great, tit for tat or benefit. It's a win-win there. So we both got something great out of it. But I don't actually see that I was paid out a dividend by this ETF. So I've already wrote an email to M1 Finance. And I understand it's sort of a brand new platform. They're still trying to work out the kinks. So I still think it's one of the better platforms out there. I made a whole video covering why I believe it's one of the best brokers. Check that video out. But the quick summary, no fees, no commission cost. You can buy partial shares. You can open up retirement accounts, your Roth IRA, which is me and my wife's main focus. She's doing her Roth IRA. I have my business now, my real estate business that I'm starting up. I have a 3-bedroom, 1-bath. I'm closing on a duplex next month. I'll be picking up a 4-plex here in a few months once I can refinance. So I'm trying to build up my real estate business, and she's still working on her Roth IRA, and eventually we're going to kind of move more into real estate. But for right now, I think this is a great stepping stone for all investors initially. So that is our cash managed account. Basically, our change there is about 0.21% in total return. We made a little bit of dividends there, about $1 and some change, so some dividends, $1.21 I believe is what we had. So overall, our cash managed account was very good. Now, one thing I wanted to cover, if we switch over to the S&P 500 index, we'll see that the month change for the S&P 500 was up 0.44, the Dow Jones is up 1.81, and the NASDAQ is up 0.74. So just looking at the S&P 500, this S&P 500 index went up 0.44%. But our portfolio went up only 0.21%. Why is that? Why did our ETFs not go and track the index? Well, there's no specific ETF that tracks an index. If you want to track something very similar to an index, then you would buy into these specific ETFs such as VU, another one in SPY. So here, VU had a total return for the month of September of around 0.06. If we look up SPY, this is another one here that tracks the S&P 500 or the S&P 500. So SPY, this went up 0.03%, and another one here is IVV. This is the iShares, I believe. Yeah, iShares Core S&P 500. We take a look at the month there. This went up 0.07. So the main differences between all of these, they all are sort of tracking the S&P 500, but none of them can accurately track the total month return there for the month of September, but they all make a pretty good sort of, they try and keep up with it. But the main difference of these is the expense ratio. So the ticker symbol VU, expense ratio of 0.04, dividend yield of 1.74. We have SPY, expense ratio very high, 0.09, not very high, but double. VU also has a dividend yield of 1.73, and iShares IVV has an expense ratio of 0.04. So basically, 4 cents for every 100 and 7 cents for every 100, depending on which fund you're in, and they basically all have around a 1.73, 1.74% dividend yield. So that's just kind of interesting. I wanted to share that with you guys. If you guys don't know that these ETFs that track the S&P 500 don't quite always keep up, or sometimes they actually exceed the actual index. So I thought that was interesting. So now, jumping over to the Roth IRA, here we can see for the month of August, the Roth IRA was sitting at a total value of $6,314.76. Our total gain was at $154.86. Our market gain was up $36.31. Our total earned dividends was $118.55. And our total return for the month of August was up 2.76%. So how did we compare to them for the month of September? Well, the Roth IRA is now at $6,510.67. So we went up about $200 in total value there. Our gain went from $154.86 to now $312.82. And our earned dividends went from $118.55 to now $136.66. So 136.66 minus 118.55. That means that we were paid out for the month of September $18.11 of straight dividends. That really helped the portfolio up, just kind of helping it out. Our total return moved from 2.76 to now 5.52% total return. We can see here that we were a little bit higher before the tariff talk and a few other, I believe Apple kind of cooled off during this period, and it has sort of cooled off, and along with other stocks here as well. Apple's still our winner in our portfolio here. So our total top point was $6,610.95. So we're not too far away, roughly about $100 from our highest point, but not too bad overall. Now, what's next? We want to take a look at what dividends were paid out for the month of September. Well, we can head over to our activity tab and check out back at September 4th. We can see that we were paid out by SPG. This is a REIT, Simon Property Group. They paid out $4.05 mixed together with my $10 deposit that I do every single week. They gave me $14.08 of fresh money going into the market. I purchased a couple, partial shares of ticker symbol AVY. This is Avery Deninshin Corporation $14.08 went into that stock. Go into our next week. We have dividends paid out. Walmart paying out $2.23. Pfizer paying $3.60. We also deposited $10 into the account. That made $15.81. Not, we had a little bit of change here left over. So we picked up some more ABY. We picked up some more Stanley Black & Decker last month at the very end of the month. I don't have it here, but Stanley Black & Decker was actually down 3% initially. So this portfolio automatically averages down on your investments that your lowest in equity in comparison to its target. And then I picked up $14.10 of WPC. This is another REIT here, which was hammered during the month of September, especially towards the end of the month. All the REITs kind of get hammered towards the end as rates went higher. Third week of September, we were paid out by Johnson & Johnson, $2.66. That made 3 purchases here. And, if you're in one of those Fidelity, Vanguard, when you're paying $5, $10 per trade, I just made 3 trades here. Very small trades of $1, $5, $6, but that would have been $15, $15 to $21 right there. So this bought me these 3 shares completely free. I bought Kimberly-Clark, Walmart, and again, bought WPC, which is a REIT. And in the last month, just this last week, I was paid out from 2 stocks, ticker symbol AVY, and Stanley Black & Decker. This is one of my newest stocks in my portfolio, or my wife's portfolio. This is $1.63 from Avery and $1.88 from Stanley Black & Decker. From those dividends and the deposit, I picked up 2 stocks here, Kimberly-Clark and WPC, carry those REITs, so helping out my portfolio. So those were the stocks that paid out dividends and where those dividends were reinvested into. Right now we have no cash in the account, meaning that we're 100% invested with all of our money. It's all working for us, getting us the best dividends we can get paid back and helping us, reach the highest amount of return that we can achieve. So quick recap of all the stocks we have in the portfolio. We have Apple, Pfizer, Blackstone Group, Lockheed Martin, Stanley Black & Decker up there, WP Carey, Johnson & Johnson, Kimberly-Clark, Walmart, Cisco, Praxair, AT&T, Caterpillar, Simon Property, Avery, and Altria. Altria, I did lower it back in August down to 4%. It was a 6%er in my portfolio, but I'm going to eventually move it out of my portfolio, but I don't want any new money going into this, so I did lower the percentage there, not completely knock it out of my portfolio yet. It's still a good dividend stock for the long term. I just want to see them turn around before I put more money into it here. So that is it as far as total equity in the portfolio, dividends that were paid out, what stocks paid out dividends, where those dividends were reinvested into. Now, as far as total return goes in our portfolio, we had a very nice return here. Here is the spreadsheet. I know I've tried to zoom in here on the other ones. Let me go ahead and zoom in here just a bit on the spreadsheet here. So I've really updated the spreadsheet to include the 1-month performance and my buy-in stock performance. So my base investment right now is around $6,213.70. The total is $6,510.69. So that's an investment difference there of $312.83, right about there. Our total dividends that we should be making this year is somewhere, within the next year, it's now $218. If we go back when we started this portfolio back in February, our annual income was $179.23. We have jumped up, stocks do increase and decrease here, but for the most part, it has steadily been increasing there annually, and we're now reaching that point where we're at $218.83. And I've also kind of changed the way that I've created my spreadsheets. So all of my stocks, a couple of them are currently down in value, but that's completely fine. That just gives me more opportunity to reinvest my money at a sale. And here we can see that a lot of the stocks overall, 50% of the stocks or more, were in the positive for the month of September. Here we can see that Altria moved up 2%, Apple moved down 1.15%, AT&T moved up 5.4%, Avery moved up 4.2%, Caterpillar moved up 10.3. Cisco moved up 1.93. We had Johnson & Johnson up 3.33. Kimberly-Clark did go down 0.04. This allowed me to average into that one. We had Lockheed Martin moving up 7.46. We had Pfizer moving up 6.53. We had Praxair moving up 2.91. Simon Property Group moving down 2.79. And we had Stanley Black & Decker moving up 4.59. The Blackstone Group moving up 3.17. We had WP Carey moving down 2.4, allowing me to average into that position this month, and Walmart moving down 1.52%. So overall, only a couple of my stocks are actually down in total percentage. This is mainly because of reinvested dividends. So we did have 2 stocks raise their dividend. We had Lockheed Martin increasing their dividend from $8 per year payout to now $8.80. This increased my total increase, my dividends. I went from, let's see, Lockheed Martin here. I went from Lockheed Martin with the same amount of capital paying me $9.79 and a dividend yield of 2.44 to now a dividend yield of 2.68 and an annual income of now $10.77. So that was a very nice increase there. We also have WP Carey increasing their dividend here, very small, from $4.08 to $4.10, where it may have been like a small change. Overall here, it does help the portfolio over the long term. WP Carey has 17 years of dividend growth, and I believe it'll continue to pay out even during these downturns. So they went from a dividend yield of 6.07, $24.35 of dividend payout, to 6.11 and $26.13 of dividend payout. So almost $2 there in just straight dividends, especially with me averaging down as well, decreasing my unit cost average and increasing my yield on cost. So overall, for the month of September, this total portfolio made 2.47%, and the dividends that were paid out, again, was $18.11. So overall, portfolio beat out the S&P 500, it beat out the Dow Jones, and it beat out the NASDAQ as far as portfolio changes for the month of September. Now, as we move down here to, this is now the VU, this is just our VU, this is our individual account. Here, we're still a positive in this one. We started with $100 base investment. We've had a lot of referrals, viewers, subscribers, friends, family joining M1 Finance. As I talked to them a little bit about investing, how much they're paying on their broker fees, what kind of investor they are, do they like to day trade, and I see a lot of people that are in it for the long term. They're not day traders. They like to buy. They may or may not sell that often. I've seen a lot of investors and YouTubers out there who say they're long-term investors, but they will talk about one stock one day, flip it the next day, sell it off, buy it back again, sell it off, talk it up again. So this is all long-term investing. I have no problem holding. You can see how many positions I'm down in right now. Do I have any care in the world? No, because those are just sales to me. And overall, all these stocks have great dividend growth potential. Some of them paying out more than 10 years, meaning that they paid out during those downturns. So no problem holding these, continue to capture those dividends. So the S&P 500 did increase their dividend payout from $2.63 to now $4.83. That's a difference of 4.32% there, increasing my dividend yield from a 1.87 to now a 1.94% yield. Annual income jumped up from $3.76 to now $4.11 there. So may not be the biggest amount, but just imagine if you had a portfolio going a little bit larger, you're able to add a little bit more money in per week. You're investing for the long term. Right now, the taxable account isn't my main focus. The Roth IRA are. So me and my wife, I let my wife, and I kind of manage her portfolio for her and dividend stocks. But at the same time, our main focus and my main focus is real estate right now. That's the whole my transitioning. So dividends for the month of September. We had quite a few dividends paid out, as we've already covered here earlier. We had SPG paying out $4.05, Walmart $2.23, Pfizer $3.06, Johnson & Johnson paying $2.66, Avery $1.63, Stanley Black & Decker, 188. And then I have a missing number here. I have no idea where we're missing $2.06 of some sort of a dividend in the Roth IRA. So we saw the difference here. We went from 118.55 to now 136.66. We did the math on it. That's $18.11, but $2.06 is unaccounted for. That could be an MLP distribution, which M1 Finance doesn't track very well. Could be a capital gain distribution. So that's just something I'll have to look at my statement once it comes out and see where that money, what it actually is. Now, where did that money get reinvested into, and where did all my weekly schedules go back into? Well, it purchased AVY. Here are all my trades during the month. I made 1, 2, 3, 4, 5, 6, 7, 8, 9. My 9 different stock buys. So at another broker where they're charging me $5, $10, that would have been, you know, at least what, 5 by 8. That's $40 right there, if not a little bit more. M1 Finance lets me do it commission free, so very nice there. So I put $56.08 of new money into the market. $40 was brand new scheduled deposit. I have a whole video on how I just put $10 in every week. The rest of it was from dividends and other stuff. I believe this may have been a capital gain distribution, because if you take away 40 from this, that gives you $16.08. So $16.05 is here, the total sum without this missing number. So I think something is missing right now in my activity bar, and I'll have to see. You know, I'll wait for that statement to come out. That's one of the issues right now with M1 Finance. I have to manually, I don't worry about it because I'm getting that money. It's getting paid to me, but at the same time, I have to actually look for it in a sense. I know it's there, but I just have to see why it's there. And that is basically it for the month of September. Hopefully you guys did enjoy the video. So our main account here, the Roth IRA, did beat out the main indexes, and we covered why VU didn't quite keep up with the indexes. Even though it tracks the S&P 500, it doesn't always measure the correct, the return of the actual index. The index is just an imaginary thing that's there, whereas these funds, these ETFs, are tracking it in a sense, but they all are slightly different. They all have different expense ratios, as we have talked about. So hopefully you guys did enjoy this video. If there's anything else you guys would like to see in the future, let me know in the comment section below. And of course, if you are brand new to the channel, subscribe, hit the notification bell, because I put out content covering stock market, personal finance, real estate, and all sorts of other stuff. So consider subscribing for future videos. And of course, thank you guys for tuning in. I will see you next time. Have a great day. Bye.